The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. And joining us now to discuss the crypto markets is Glen Goodman. He's a crypto consultant at Israel-based crypto exchange eToro. Welcome, Glen. All right, so we see Bitcoin holding $20,000. Hello there. $20,000 resistance after slipping below that threshold over the past couple of days. What's your crypto markets outlook?
Well, I wanted to draw your attention to the comparison between Bitcoin, Ethereum, and Nasdaq, because obviously, as we know, the crypto markets have basically been following the stock markets for about 6 months now, pretty closely. Nasdaq in particular. Now, usually when we sort of chart them all together, you can see a sort of a correlation where we squash down Bitcoin and Ethereum so that you can see the line very close to the Nasdaq line. But what I've done here is I've stretched it out to show the actual percentage falls that we've seen over the past 6 months. And as you can see, Nasdaq has fallen, but it actually hasn't fallen anywhere near as much as the crypto markets have. But what I think is particularly interesting here is that everybody, of course, has been looking forward to the merge, right? Everybody's very excited. That's the only narrative in crypto right now, is that the merge is coming, and the proponents of it obviously say that it's going to make everybody's life a lot better, and it's going to be a wonderful thing, and obviously more environmentally friendly, and all the other parts of the merge narrative. And they say that's why Ethereum has been performing so strongly in recent times compared to Bitcoin. But if you look at this chart, what you actually see is that Ethereum really just fell much heavier than Bitcoin as the markets were falling generally in the early months of the year. And then after they all bottomed in June, what happened then was Ethereum played catch up. It's now, as you can see, caught up with Bitcoin, caught up very, very closely with Bitcoin. They're basically now both down about 60% since almost the end of the year. I think around about early part of December that chart starts at. So they're down about 60%. Both of them since then. And so I guess what I'm trying to say is, yes, the merge narrative matters. And yes, it has got people excited. And it probably contributed in some small part to the rise that we've seen in Ethereum in recent weeks. But ultimately, let's not get too excited about its impact on the price. Because as you can see there, looking at a slightly greater scheme of things, the merge is not getting buyers so excited that it's really causing a big change in the Ethereum price compared to other cryptos.
Interesting. Are you also saying that the Bitcoin and Ether are performing, are they correlated to the Nasdaq? Even they may just be more reactionary.
Yeah, they're highly correlated to the Nasdaq. It's harder to see on that chart that I've stretched out there. When we squash them down so that they're all kind of moving together, it's easier to see. But actually, what happens is whenever the Nasdaq falls a few percent, then the whole crypto market tends to fall more than a few percent, maybe double as much, or sometimes 3 times as much as Nasdaq does. The problem is when Nasdaq starts recovering again, it has these little periodic recoveries. We don't tend to see such strong rises in cryptos. Basically, the whole crypto market has lacked buying power for about the past 6 months now. So it's affected very heavily by falls in the stock market, but it's not affected so heavily, unfortunately, by the rises that follow the falls.
So we're ending August. I'd like to have your analysis of how cryptocurrencies performed in August, and what do you see coming ahead in September?
Well, I wish I could give you good news about September, but as you can see on that chart there, September is the cruelest month for the stock markets generally. That chart goes all the way back to 1950, so it's looking at 70 years worth of stock market data, and on average, stocks fall in September. But let's not forget, that is just an average, okay? They don't fall every single September, so there is hope at least in that regard, but on average, stocks tend to fall in September and then have a rally towards the end of the year. And it's funny though, because it's one of those kind of things that brings out the contrarian in me, because everybody I speak to and everybody on Twitter are all saying pretty much the same thing. They're all going, yeah, everything's going to fall in September and then we'll get a year-end rally. And when everybody says the same thing, I can't help but think that the opposite might happen. And so looking at the stock charts generally, and of course the crypto charts that are correlated to them, yes, they do look bearish, but we haven't made a new low yet. We haven't got down to that June level, and it's not an absolutely full. It's not a predetermined conclusion that we will definitely get down to that level and then go even lower. I think there is hope, and we can talk about that in a second, but there is hope that stocks and thus cryptos could turn around.
All right. Well, looking at some of those headwinds, we got comments in this morning from Cleveland Federal Reserve President Loretta Mester saying that she sees interest rates rising much higher before the Federal Reserve can ease off its battle against inflation. So what do you make of those comments, just on the heels of Friday's comments at the Jackson Hole Symposium, where Fed Chair Jerome Powell himself was quite hawkish?
I mean, they are talking tough, which is why stocks and cryptos have been falling in recent days. They've fallen hard. I mean, when I talked about nothing is a foregone conclusion, I mean, August tends to be a bad month for stocks, but actually, until the last few days of August was very good for stocks. But then we got those comments from Jerome Powell, and they were really hawkish as hell, let's face it. He was saying that he wants to be like Paul Volcker, the legendary Fed chief who in 1980 decided that he was going to conquer inflation, the inflation that had benighted the world's economies since the 1970s, and he was going to beat it. But there was one big difference, right, between Paul Volcker back then and Jerome Powell right now, and I'm not sure Jerome Powell actually appreciates that. But the reason why inflation, the main reason why inflation has been so bad in recent times is, of course, the supply shock caused by the energy crisis, right? And that's, partly due to the war in Ukraine, but it's not entirely due to it. It's also because we haven't been investing much money in fossil fuels for many years now. And in 1980, it was a very different situation because they'd had that inflation due to high oil prices throughout the 70s. That had encouraged a lot more production of oil to come on stream. And so naturally, inflation was, in my opinion, probably going to come down anyway in the early 80s. But Paul Volcker made absolutely certain that would happen by raising interest rates really hard, plunging the US economy into a deep recession in the early 80s, and conquering inflation for a few generations, really. It was a big success, and Jerome Powell wants to show that he can be just as successful in that regard. I'm not sure he can, because this time round, we haven't been investing in oil and gas and fossil fuels in recent years. There isn't a whole new load of this stuff about to come on stream. And so it's quite possible that inflation will remain high, whatever Jerome Powell chooses to do. And he may just push America into recession, a deep, deep recession, for no good reason. That's what really worries me.
Oh, wow. Well, let's talk about silver linings, Glenn. Is there hope for stock gains, crypto gains, despite all the negative headwinds?
Yeah, I think the big hope is that he will not, he's not going to pivot. Okay, anybody who talks about a Fed pivot where he'll stop raising interest rates and start reducing interest rates, that ain't going to happen. Okay, he's made that pretty clear. He wants to conquer inflation. But I suspect that if the US economy falls off a cliff and we start getting some really negative data in the next few weeks or months, then I think he will be very scared. And what he would do, in my opinion, is he's pretty likely to pause. Right? And pausing interest rate hikes just in itself, I think, would be seen as salvation by many traders, because everybody's so desperate for any hint of good news now, anything that can make them feel positive. All the sentiment indicators are so negative that I think even just him saying, we're going to pause interest rate rises because we've got this dual mandate. The Fed has a dual mandate to conquer not just inflation, but also to keep employment high. If employment numbers start looking really dire, then it's part of his mandate to make sure that they don't start looking even more dire, right? So he will quite possibly then just say, right, I'm pausing interest rate rises. I don't know when we're going to start them again. We'll start them going up again at some point, but not quite yet. And I think the reaction to that would most likely be the markets getting really excited, maybe even going crazy, dare I say it, is possible. But, certainly they would take that positively. respectively. And as I say, because crypto markets so strongly correlated to stock markets, then both will probably go up at the same time.